Wall Street investment bank Goldman Sachs just announced that it is planning major layoffs this month. Goldman Sachs said that the investment bank will cut several hundred positions in September. Goldman is the first major Wall Street investment bank to cut jobs. But it is not expected to be the last because deal volume has collapsed. This video continues our coverage of the wave of layoffs sweeping the United States. What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Goldman Sachs has said that it is reinstating its long-standing tradition of yearly performance-based job cuts. Typically, Goldman cuts the bottom 1% to 5% of employees every year, based on performance. The current layoff is expected to be 1% of employees, which means less than 1,000 positions. Goldman Sachs currently has 47,000 employees. The job cuts are spread across all departments, according to a report published in the New York Times. Goldman Sachs declined to make a spokesperson available to comment on the layoffs. The U.S. economy is teetering on the verge of a recession and dogged by runaway inflation. And that has led to a steep downturn in deal-making volume. Goldman Sachs' revenue has lagged this year, disappointing Wall Street analysts. This year's possible resumption of layoffs come amid a dramatic slump in revenue. Goldman Sachs CEO is Wall Street veteran David Solomon. Goldman reported earnings of $2.93 billion in the second quarter. That is around half of its reported earnings for the second quarter of 2021. Investment banking was source of the revenue and earnings shortfalls. Goldman's revenue from investment banking is 41% lower than in the same quarter of 2021. Trading revenue was actually up 32% year over year, but that did not fully make up for the shortfall in investment banking. Corporate mergers, initial public offerings, and other big corporate deals are down sharply overall in 2022. That is because the Federal Reserve has aggressively raised interest rates this year. So far in 2022, J.P. Morgan Chase and Morgan Stanley also posted steep profit declines in both revenue and earnings. The investment banking division of J.P. Morgan Chase reported a 54% revenue decline as compared to the same quarter in 2021. Morgan Stanley stunned the financial world, saying that its equity underwriting fees were down 86%. Wall Street investment banks are taking a hard line on demanding that employees come back to the office after the pandemic. Solomon said, "Working from home is an aberration and all employees need to get back to the office." Goldman CEO Solomon says that the investment bank will not accept any excuses for employees not to come back to the office. Job cuts on Wall Street come as layoffs at technology companies are just revving up. Layoffs at big tech companies started with a quiet trickle, but now appear to be accelerating. This includes established big names, Web3 unicorns, and everything in between. A year ago, this seemed unthinkable. But now it seems like an ominous sign of things to come. Here is the list of companies that have announced layoffs in August 2022 alone. Snap, owner of Snapchat, announced a 20% reduction of employees. This amounts to approximately 1,300 workers. Snap also initiated a major restructuring of their online platform. Apple announced that it is cutting 100 positions and slowing hiring and spending. Oracle, the worldwide software, has cut hundreds of positions but declined to say how many. Most job cuts are said to be in the customer service unit for U.S. customers. Crypto trader Coinbase announced a 20% workforce reduction. Crypto lender Genesis cut 20% of its workforce due to what they call turbulence in the cryptocurrency market. Online stock brokerage Robinhood cut 23% of its employees. This is the second round of layoffs for Robinhood so far in 2022. Connected exercise pioneer Peloton has cut 800 employees, announced several store closures, and raised prices. Even companies that are not considered to be in the technology space are announcing job cuts. Walmart is cutting 200 corporate employees. The job cuts are focused on merchandising and real estate. Car giant Ford announced that it is cutting 3,000 salaried and contract workers. The job cuts are in India, Canada, and the United States. Wayfair, the Boston-based home goods company, Wayfair is cutting 870 employees worldwide. HBO and HBO Max cut 14% of its employees, which is about 70 people. Bed Bath & Beyond, the latest meme stock, is cutting 20% of its corporate positions as part of what management calls a major restructuring. It is also closing 150 stores. Dallas-based health services company Signify Health is cutting 500 jobs. Exercise equipment startup SoulCycle has laid off 75 employees and closed 25% of its studios. Gannett, the largest news publisher in the United States, announced the elimination of dozens of positions. Electronics retail giant Best Buy has cut hundreds of jobs in its stores across the U.S. due to what they call a challenging macroeconomic environment. Online prescription glasses retailer Warby Parker is cutting 63 corporate positions. This is about 2% of its worldwide employee base and 15% of its corporate jobs. Electronic payment processor Fiserv has cut an unspecified number of jobs. Google, which has not yet formally announced layoffs, said that there would be an overall review of sales performance and performance in general. According to the report, the warning states that if third-quarter results don't look better, then there will be blood in the streets. Last month, CEO Sundar Pichai acknowledged, during a shareholders' meeting, that Google's performance has been far from good. Despite the number of employees, Google seems to be underperforming as a company. Recently, Pichai shared his plans about a hiring and investment slowdown through 2023. Pichai is publicly asking employees to work with greater urgency and more hunger. Last month, Meta Platform CEO Mark Zuckerberg told employees that the company plans to reduce its hiring target for engineers from 10,000 to between 6,000 to 7,000 amid the market downturn. Realistically, there are probably a bunch of people at the company who shouldn't be here, Zuckerberg said. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.